Focusing on energy futures with the weather we have in Texas, a lot of outages, and these strategies have done really well. You see new equity peaks right here in SR CounterTrend III A. This performance summary goes back to 2007 with $25 round turn slippage and commission. Here are the performance stats: 71% profitable, pretty big average daily profit for a short-term strategy. $5,000 drawdown, which is normal for a automated trading system in crude oil, very manageable. You could trade these with the smaller contracts as well. Here's the most recent trade. These strategies are in some of the portfolios, SR CounterTrend IIIs. So they're pretty correlated, these seven of the SR CounterTrends. I'm going to go over each one of them, but you see the SR CounterTrends here. And so the design of these portfolio approaches is to have different strategies for different modes of the market. So, for example, right now we've been in kind of a slow uptrend, and so you get these opportunities to buy the dips, and then maybe later the trend accelerates. I'm talking about on a daily basis, and so you have a runaway market, and so you may not get as much of an opportunity to buy the dips. So a strategy like Cobra Crude tends to do better. The SR CounterTrends look at the long-term trend. They buy dips in uptrends, short rallies and downtrends. Cobra Crude does not look at the long-term trend. It just trades that trend for the day. It waits for a trend, and then it buys a very small pullback. So it's more momentum trend-based in the short term. So it's a different algorithm. You get diversity there. Let's look at the performance summaries for all of these, all 7 of these dip buying strategies. Then we're going to look at a portfolio performance summary to see how these strategies do together. And so you've SR CounterTrend II, or this is SR CounterTrend III A, and then SR CounterTrend III B is similar. These can hold overnight. The other SR CounterTrends and other strategies in this are day trade only. This is a very short term look back. It's hard to go back to 2007 in all these windows without crashing TradeStation or any platform really, because it takes up a lot of memory to go back on that time frame. That many years and that interval for too many windows at once. You have to do it one at a time. So for the purpose of this video, we're going to go back and we're just going to look at each one going back 7 months. We have the portfolio performance summary that goes back longer that I'll show you here in a minute. So this is 13 of 18 since July of 2020, and you see the strong 10 winners in a row. Trade number 8 through 18 all have been winners. And so SR CounterTrend IV, very consistent since July as well. 7 out of 9. SR CounterTrend II, 12 out of 14 since July. You see the trades there. It's a little more active than the others. And then SR CounterTrend II V2M1M. Now these are fairly correlated, especially the V2M, 1M, 5M, and 15M. And so you see the equity curve here, and it's gone 6 out of 7 since July. And this one actually have 12 months for some reason. I have the setting for 12 months on this one. It's gone 9 of 11, and here is the equity curve. This is the 15-minute version. It takes less trades. 5 out of 7 since July, and then Cobra Crude. It hasn't done as well since July. That's the diversity of methodologies. It's been more of a dip buying market, and so once the market dips and rallies, it might pause, and so strategies like crude oil might get in near the highs right now. But later on, if this becomes a runaway market, then you have the opportunity the SR CounterTrends may not get an opportunity to get in if it's a runaway market, because the market may not dip, and then a strategy like Cobra Crude can capture it. So these are short-term look backs. Once again, of the longer-term performance. This is the aggressive version of Cobra Crude, so it's taken more breakouts. And so while Cobra Crude's been up, the breakouts that this has taken have not followed through right now. So that is a diversity of methodologies that we look at. I also want to look at, this is not something we're trading or recommending right now. This has been a gap fill market, but it is another algorithm that we have on the shelf, but we're not trading right now. And so let's look again, just for example, at SR CounterTrend III. This is a nice performance summary, good strategy, good back test. There are periods of time when it is not profitable. There are periods of time that it goes sideways. March of 2008 and you make an equity peak here, but doesn't really get going again until July of 2009. So a year and 4 months in here where it didn't do much. And so this is what we've seen, continue to see in unoptimized strategies. You want a strategy. Everyone wants a strategy that does this right here in this time frame. I'm going to draw that with the pen so you can see more clear. Everybody wants something that does this, and they want it to do this all the time. But no strategy I've found does this all the time. And so you have periods of time where you're sideways. This is over 2 years right here. This is over a 1 year period. There's a time period here when it goes sideways, time period right here when it goes sideways. And so no strategy is profitable all the time. Strategies go through drawdowns, they go through sideways periods, 1 to 2 years or longer at times. And so let's take a look again. So for example, this time period right here, March of 2015, doesn't really get rolling again until November of 2017, so 2.5 years. It does make an equity peak here, but like I said, it doesn't really start breaking out of that channel for 2 years. And so you can continue to try to develop strategies that do this all the time, but I've found there tends to be some bias. It's very hard to find a strategy. We're back testing this 14 years with $25 round turn slippage and commission. So the good news is these strategies do go long and short. You can see they do better on the long side. So I anticipate higher prices in crude oil, but we're not tied to higher prices. We do have strategies do go short crude oil. So energy markets are a market to consider trading. 2020 was a little bit challenging when we had negative prices. Would not be surprised to see some inflation and a run up to over the next year up to over $100 a barrel in crude oil with inflation and energy demand and just the kind of markets that we're in. So we could get a runaway market. We could add some more runaway type strategies to this portfolio, such as the ones we use in the NASDAQ. I'm going to show you the portfolio performance summary now for the energy markets. So here's the portfolio calculator. I've customized it just to include the 8 crude oil strategies, the 7 SR CounterTrends, and Cobra Crude conservative through February 16th. You see it making new equity peaks. We talked about how SR CounterTrends struggled in 2020 with all the V patterns, and you can see the width of the drawdown. And now the SR CounterTrends are creating equity peaks with this concentrated group of strategies for crude oil. It is up 18,850 hypothetically on the year. Now these strategies are in our all strategy access. So if you just want to trade this concentrated group of strategies in crude oil, you want to just trade energy futures, you could trade these 8 strategies in this setup. You get all 10 actually in this customized energy portfolio for crude oil. And once again, these can take long and short trades. You see some of the best years and some of the worst years. 2009, I know we had crude oil surge to over $100 a barrel, 140 and higher. So interesting times back then. And you see, in 2020, this group of strategies kind of broke even. And you see it was a down year in 2012. And so consistent set of strategies, and these are hypotheticals based on this setup in these crude oil strategies. These crude oil strategies, a lot of them, like I said, went sideways or can have down years, or they can make worst case drawdowns. Things can happen in crude oil that have never happened before. We saw negative crude oil prices in 2020, so I do anticipate higher prices. I do like this setup. And these are some strategies to consider if you want to trade energy futures and specifically crude oil futures.